time where a lot of people become super duper millionaires. You know, they save their money, they buy low, and then when the market jumps back up, they all right.
I 100,000% agree with that. When there's blood in the streets, people get rich, and I think people can't panic. You just got to stay diligent. You know what I'm saying? And keep going. So let me ask you this question, because I know you. Go ahead, I hear you. Go ahead, bro. I hear you. No, finish what you were saying. Can you hear me?
Talking to me?
Yeah, I'm talking to you.
Oh, no, I didn't hear. No, I didn't say nothing. No, you was talking. You said, let me ask you a question. I ain't say nothing.
Oh, no, my bad. So, no, I was saying, so like, what kind of advice? Because there's a lot of first-time home buyers that follow me, first-time investors. Obviously, everyone doesn't have the type of money or the type of earnings like you, but like, what kind of advice would you give someone that's coming up in the game during times like this? Like, how are you preparing for this pandemic that's happening right now?
I mean, honestly, you really can't prepare. You know what I mean? It's, of course, if you're just talking about just personally, yeah, I made sure that, you know, I got enough to last me for a while and, you know, ration it off just in case. But I mean, it's one of those things where it's nothing you can do. It's like, you know, I got to prepare for the worst. I know that some of my tenants might not be able to pay rent. You know what I mean? I know that it is what it is, you know what I mean? But it's one of those things. It's nothing I can do. We're all going to get beat up for a while. But it's how we come out of that beat up, that of getting beat is everything, you know? For myself, I'm looking for what's next, because we're going to come out of it. You know what I mean? As you see, China is the lowest, it's the lowest cases now that the epidemics happen out there. I think they had 15 cases, and it used to be 4,000 a day. Yeah. So when it does come out, is what are you going to do? What are you preparing for? It's kind of like the recession. When the recession hit and everybody was so fucked up and people didn't plan, they were so scared. And the people that did plan and say, you know what, I'm going to pick up all these properties for $500, thousands of dollars. And then when it comes back, those properties are worth $400,000 or $500,000. So that's what area is going to be hit and what I can do, because people are scared. And same thing with luxury items. I mean, I don't want to talk about a car, but, you know, if I wanted a car right now, after this is the time I would buy that car, because it's probably going to be dirt cheap. Same thing with interest rates, refinancing all my properties. I've never seen interest rates this low before in my life. How many times did I call you? It was like, yo, I got to refinance my crib.
Yeah. I think this week alone, I think I've spoken to you more times ever than I've known you, because I mean, look, you're trying to take advantage.
Yeah, that's right. When they start talking interest rates, you know, under 3%, I'm like, oh, this is the time. And people be like, oh, well, why would you do that? I mean, even if it saves you $300-400 a month, you know, at the end of the year, that's $4,000 or $5,000 that's back in your pocket. You know what I mean? And in the bigger properties, is you know, you're talking about thousands of dollars, $1,500, you know, and all that. So yes, it's definitely worth it, and that's what I'm doing right now. And I'm also always looking for properties. You know what I mean? New constructions. People are getting beat up. So if these properties you can grab, I'm gonna try to grab them.
So you're looking for investors who are now going to struggle, you know, with their properties. You're looking for just any type of deals right now. So right now you're going to be more aggressive than where you were over the last 2 years, is what you're saying, basically.
Absolutely. Yeah, absolutely. I think, I mean, in season I've been talking about it, that's the way we had to play. You know, it's if you think about it, if you think about how white America became rich, and this was it, after recession, they picked up everything, held on to it, and then was able to do it. So this is the time where you say, you know what, maybe I don't want that Gucci belt. You know, maybe I don't want that McLaren or that Benz or that BMW. Maybe let me hold off for a little bit and then see what you can do, you know. Like I said, you know, I just purchased a house, and I'm mad I bought the house before all this, because I know if I would have waited 3 weeks, it would have been way cheaper, the interest rate. But I mean, there was no way of me of telling. But if you're in the process of purchasing a house, I would pretty much sit down for a second, see where this goes, because it's going lower and lower and lower. Even the stock, I was looking at Disney stock 2 weeks ago, and I think Disney stock was 132. Earlier this week, it was like 120. Okay. And when I looked on Thursday, I think it was like $92.
Wow.
So I'm not sure what it is now, but I mean, we all know there's certain stocks that's going to jump back up. Disney is going to jump back up. You know,
even American Airlines was like that too. American Airlines was like $40-something, and I think it traded down to like $20 or something like that, something crazy.
Yeah, those are the ones you look at because you know Disney's not going anywhere. You know American Airlines hopefully ain't going anywhere. You know Apple ain't going nowhere. You know those are the ones that will be here for a while. But you know, right now people are pulling their money out because they're scared. Like I even called you and was like, "Yo, how much money should I pull out the bank?" Didn't I?
Yeah, I was in Target when you called me looking for shit paper.
Yeah, I was like, "Yo, how much money should I pull out the bank? Should I pull out money? How much should I pull out? How much should I pull out? 100 grand? What should I pull out?" You was like, "Damn, be easy." They just they just put through trillions of money into the bank economy. You all right? But you know what I mean?
You
There's
good.
I need to ask. And I call people that would know better than I. You know, if you wanted to know about DJ equipment, I'm sure you would call me. But since when it comes to mortgages and stuff like that, I'm calling you.
So I'm glad you spoke on that, right? Team building, right? Because people are always trying to do things on their own, right? How important it is for you to have a team around you, because people only see what you post on the internet, but people don't really see the behind the scenes hustle, you know, that I get to see. Like how important it is for you to have a team behind you so that way you can accomplish everything that we see in the public side.
I mean, as far as my team is concerned, I mean, think about it. I'm not you know, when people ask me about mortgages and things like that, I don't know. You know what I mean? All I know is what you tell me. So when I have to get answers, I call you because I'm not a mortgage. I don't know about mortgages. You know, when it comes to construction rates, I can only assume. And then I got to call my construction guy and be like, well, how much is this going to cost? All right, that's what I thought. You know, when it comes to certain things, I have to ask. If it comes to somebody like, yo, how do I fix my credit? I'm not a credit person, you know, but I have a team around me that I can call at any given time and ask questions about those things. I mean, even when it comes to, you know, all the stuff that I have to do with booking shows and all that other shit, like I have somebody that can do it. They got the child lock on me, so I can't even get out the car.
Yeah, I see you struggling right now.
Get out the car. They got the child lock. I got to reach outside and open the door. But anyway, but yeah, but I got a team that makes sure everything takes care of. You know, whether it's my assistant Mercedes that handles my bookings and shows and all that other stuff. Like everything's a team. You know what I mean? Even my wife, she packed my bags today, made sure I had wipes and all that other stuff, and made sure I had masks and that. You know, everything's a team. You know.
Team building is very important. All right, so final word, because I know you're about to get in the mix, man. What's the final word that you got for the audience, man, about real estate, about this pandemic? Like, what's your final word that you want to say to the people?
I mean, I would just say, just be careful out there. I mean, we don't know what's too far or what's too little, but we got to prepare for the worst. You know, make sure that your family is set. Make sure you're doing what they say, even though we don't know if it's right, but make sure you are washing your hands. Make sure you take as much extreme caution as possible. Like I was in the airport today with a mask on and people looking at me crazy, but I am the sole provider for my family. I got 5 kids, my daughter, my son, you know, I have to be a sole provider. So I got to make sure that everything is right. And if it's not, it's on me. So I'm taking every precaution necessary.
Cool. I appreciate your time, bro. I know you out there in the mix, man. Stay safe, man. And I'll see you when you get back up top.
All right, bro.
All right, bro. Stay up.
Hello. How you doing? Good.
Shout out to my guy, DJ Envy. Thank you all for joining live. My name is Matt Garland, MG, the mortgage guy, in MLS number 58700. So we went live on the webinar, and I didn't even know the webinar was live. And then I saw Envy on the webinar and checked in real quick. So like I said, man, thank you all for joining me today. Shout out to everybody that's here in the webinar. If you want to join the webinar, I'm gonna send you guys a link right now on YouTube. So that way you're able to join in live for the webinar. This is main, and I'm gonna have a couple other special guests on this webinar as well. So I want you guys to get your questions together. Let's ask them. This is your time. I wanted to jump on today just because there's so much concern and so much, you know, craziness going on in the world today, and everyone has real estate questions. And I've been getting a lot of DMs on my Instagram page behind this coronavirus, behind the market. People have a lot of uncertainty. So I wanted to come on for you guys so that way you guys can get your questions answered, right? So if you're here on the webinar with me, please feel free, raise your hand. Do not in the chat box. If you're in the chat box, I'm not reading any of that. This is straight Q&A. So if you in the webinar, raise the blue hand and I'm gonna bring you on like I just did Cash. Cash, what's up? Cash, can you hear me? Cash, can you hear me? Hello?
Yeah, I can hear you.
You hear me, Cash? All right, Cash, talk to me. Where you calling from? Cash, come on, brother. All right, no more Cash. Cash didn't want to talk no more. All right, guys. So if you have any questions, we got Chantel. Chantel, talk to me, Chantel.
Hello.
Hey, how are you?
Hey, I'm good.
How's everything today?
It's good. It's good. I actually inboxed you last night and you gave me a number. We were talking about lowering my interest rate. I text you this morning, but I see you're busy, so I guess I can ask my question here.
Yeah, go
So,
ahead. That's exactly why I did this too, is because of I'm trying to get to everyone and I'm getting pulled in so many different directions. So I figured why not do this instead?
Right. Thanks so much. I really appreciate it. But I'm from Chicago and I purchased a 4-unit building. It's a FHA 4-unit, but my interest rate is like 5.2% or something like that. And as you were talking about the interest rate earlier, I'm trying to see what I should do because I'm actually trying to refinance, but I'm trying to get another property after this after 12 because I have the FHA and they told me that I have to live in the building for a year and it's gonna be a year in like 2 more months. So I'm trying to see if I could like refinance it, go conventional, and then get another FHA so I won't have to put the 20 to 25% down for the conventional loan and still just have the when if I do the FHA I only have to do the 3.5%.
Okay.
So
All right, Shan. So let me make sure I got this right. Let me take my notes while you're talking. You got a 5.25% right now,
mhm,
and that's on an FHA loan.
correct.
All right. And you have this loan, you said 10 months now.
Yes.
Okay, yes. And then so your main thing is, and this is a one-family property?
It's a 4-unit and it's owner occupied.
Okay. All right. So you did it smart. Now, how much is your mortgage payment right now?
It's 2,100. That's because I have a high taxes, but yeah, it's 2,100.
And how much rental income are you getting from the property, from the 3 units?
Like almost 5,000. I cash flow to 1,900 a month, and if I'm
Wow.
moved out, I'll cash flow like over 3,000.
Wow. That's awesome. Where do you live? Where you from?
I'm in Chicago, but I bought a unit in Calumet City, and I got it for a really, really good deal. And like I said, it also cash flow really good. So it was 140 and the equity in it now is probably about 80,000. It's worth like 220, 225 now.
Okay. So you got 220, 225, you owe around
Mhm.
140, you have a 5.25 interest rate currently, and you're currently cash flowing around $3,000.
Well, 2,000 because I'm living in one of the unit. I'm staying in the smallest unit, which is like a 1 bedroom.
Okay,
But
so you at 2K cash flow. So
mhm.
you're living for free and making $24,000 a year.
Yep.
First of all, let me give you a round of applause.
Thank you so much.
Shout out to you, Chantel, for
Thank
being
you.
smart with your purchase by buying that 4 family. So now this is what we need to do. We definitely need to refinance you out of that 5.25 because we can get you in the low threes right now. Right
Okay.
now, obviously, I won't know exactly what the interest rate will be until I review your credit and I review your income.
Okay.
But well, the ideal would be refinance into a conventional mortgage,
Mhm.
right? Now you free up that FHA so you can use the FHA again when you move out of this property and you can buy the new house as your primary residence.
Right, which is the plan, but I'm stuck in between if I should do it that way or I should pull the equity out or and use that to buy another one or that's I don't know. what should I do?
Well, you have a 4-family, right? So if you're doing a
Hmm.
4-family and you go conventional, and if it comes in for 225,000, your max loan to value is going to be about 70%, right? So your
Right.
LTV guys is loan to value. So the maximum amount of loan that we'll be able to give you is 157,000 if the house comes in for 225. So that will leave probably a couple thousand left over to you after closing costs on the refinance, where you
Hmm.
can now use, even if you get 10,000, let's just say as a hypothetical number right now, if you get $10,000 from the cash out refinance, you'll still be able to get a much lower rate than you are right now. And you can use that 10K towards the down payment of your next property.
Right. Well, I guess I probably shouldn't do that then, since I really don't need it. As far as like, if I was supposed to buy another building, I will have the 3.5%. So I guess just let it sit, or I don't know.
I mean, we can look, money is cheap right now.
Hmm.
So if you take out 10K on a cash out, I mean, your payment, the difference will probably be a couple dollars. I mean, I'm talking
Oh, really?
30, $40, if that. You know what I'm saying? So
Right.
what I would want to do is kind of we look at both scenarios, whether we do a rate and term refinance or a cash out refinance. And what I'll do is I'll give you a side-by-side comparison. So that way you can see exactly what options make sense for you.
Hmm.
And then we can kind of, and then you're the CEO of your business. Then you can make that decision on which way you want to go
Right.
from there.
Okay. Thank you so much. I really, really appreciate this.
No,
And you
no
have a
problem,
good day.
Chantel. I appreciate you,
Okay.
Chantel, and
Um,
shoot me a text again, so that way
okay.
I'll respond to it as soon as I get off this text, and we can off this webinar, we can get on another call.
Okay. Thank you. Have a good day. Bye
No
bye.
problem. Thank you. Shout out to Chantel from the shop. She's out here moving and shaking. I hope y'all really paid attention to that conversation. And I'm gonna recap it for you. She purchased a 4-family in Illinois on the outskirts of Chicago, right? She purchased this property, 4-family. Her debt is only $2,100 a month. Her mortgage, taxes, insurance, only $2,100 a month, and she's collecting around $4,000 a month in rental income. She's cash flowing $2,000 a month. That's a perfect example of how you use a FHA loan to live for free, right? So shout out to Chantel Carter. I really appreciate you. All right, so let me get my girl Asia in here. Asia. Hey, Asia, can you hear me? Okay, I'm trying to get you on. Asia, can you hear me? Come on, unmute. All right, I'm trying to get you on, Asia. Hold on. Asia, you gotta turn your mic on. All right, Asia, I gotta go to Dennis now. Dennis. Hey, can you hear me, Dennis?
I hear you. Can you hear me?
Loud and clear, man. How are you?
What's good, my brother? How's everything?
Man, I'm alive and blessed, bro. I can't complain. How about yourself?
I'm literally just clocking out of work right now. You caught me at a perfect time.
Perfect, man. Where you calling from?
I'm calling from right now. I'm on the Upper West Side. I'm a doorman, but I live in Westchester County.
Okay, that's perfect. So talk to me.
All right. I had a few questions, but just to get the gist of it, first one is how and when should I apply for first-time homeowner grants?
How should you, and you're here in New York, you said, right?
Yeah.
So there's a couple different programs in New York, and it's all of it is income based, right? So you have like HPD grants. What you can do is just Google home buying grants in New York, and you'll see a bunch of them come up, right? But a lot of them, again, Dennis, are all income based. So if you make a certain amount, then you won't qualify for them. A great program here in New York, which is which has good income cap limits, is Sony Mae. Have you ever heard of Sony Mae?
Nah, I've heard of the like Fannie Mae and stuff like that. I've never heard of Sony Mae.
Perfect. So Sony Mae is a state of New York mortgage agency. It gives borrowers the opportunity to purchase homes using a conventional mortgage, but they'll give you 3% of the purchase price for down payment. And it's a forgivable grant after a certain period of time of you living in that home. I think it's 5 or 10 years. I'm not 110% sure off the top of my head, Dennis. But they'll give you max $15,000 that you can use for your down payment. And the income is very friendly. So I know like in the boroughs, you can probably go up, if you're a family of 2, you can probably go up to like 120, 130,000 income and still qualify. Whereas with the HPD grants, they'll cut you off. Like if you make more than like 70, 80,000, I think is like the max, you won't qualify for it. So Sony Mae is a terrific program here in New York for anyone who's looking for down payment assistance. Now with Sony Mae, it's not like the grants, like the HPD grants that you're getting from, the city. You actually don't have to go through that long process, like applying for these grants. With Sony Mae, you just have to work with a participating lender, and that lender will have to underwrite according to Sony Mae's guidelines. And once you're approved with the lender ships the loan to Sony Mae, and then they underwrite the loan. And then once they finish, they underwrite, which right now will probably be like 2 to 3 weeks, then you get approved. So it's a little bit more of a streamlined process for you to get that down payment assistance.
At what time, though, would I start looking for the grants? Like before I find the property, or after I already found the property I'm interested in that I want to pursue?
Nah. So if you're going for a grant, like a true grant from the state of New York, you want to start that process way before you find the house, because that grant process can take 3 to 6 months to get approved for it. Okay. With Sony Mae, once you want to get pre-approved by a participating lender, and reach out to me and I can help you with that. But you want to get pre-approved, find a house, like the normal process, and then you just got to make sure when you put in your offer, you got to let people know that you're doing a Sony Mae loan, because you want to have probably like a 60 to 90-day closing, just to give yourself more than enough time to go through the process and close on time. So you don't want to have like a 30 or 45-day closing, because it may not be enough time to close with a Sony Mae loan. But I
got Marsha on my side right now, so we're working right now too on that.
Oh, you got the mortgage queen on your side?
Yeah.
Say less then, bro. You got the queen, so you good.
Nah, copy. I just didn't ask. I didn't get a chance to ask her because everything is so preliminary. We just got everything, pre-approved and all that. So I wanted to get a chance to ask you that question.
Yeah, no doubt, bro. We can definitely help you with that. And just holler out to Marsha, and she can break down the whole Sony Mae process for you. And we can take it from there.
Copy. Another quick thing, if you got time. The 203K loan, right? Mm-hmm. After, I guess, because I found a property, but it's a total gut, but it's like at a really good price and the taxes are low. After the remodel or after the gut job that, I get the loan and I fix up the house or whatever, are my taxes going to shoot up at that point, or are they going to stay at what they've been assessed at right now?
I mean, it's possible depending on the type of work that you did with the K. So like if you're adding square footage, then yeah, you can anticipate probably your taxes going up in a couple years. But if you didn't change the structure of the home or add any additional square footage, I think you can rest assured that your taxes won't go up drastically because of the remodel. But also remember, and everybody watching this on the webinar and everybody on YouTube watching this, understand one thing: property taxes and homeowners insurance go up every single year, right? They get reassessed every single year. So you want to make sure that you are paying attention to when you get that bill in the mail from the town talking about your taxes, pay attention to it. Even if the bank is responsible for paying it, the bank doesn't care what the taxes are. The bank is just going to get the bill and they're going to pay it. So it's your job to grieve your taxes with the town that you live in, not the bank's job. But expect that your taxes and your homeowner's insurance will go up annually.
Okay, copy.
If you got a 30-year fixed rate mortgage, Your interest rate won't change. That principal and interest mortgage payment won't change. But if your property taxes or your homeowner's insurance goes up, then your mortgage payment can go up. If those things go down, then your mortgage payments will go down. So I want you guys to really pay attention to that as you're out here buying property.
All right, bet. One more quick thing, the 203K loan. So basically that's the loan that they approve you for to fix the house or whatever. Who evaluates like what needs to be done to the house and how much is that going to cost? Like, how do they work that into the to your mortgage every month? Like, who evaluates and makes that type of evaluation?
The appraiser is always going to look at what the values are, right? But as far as knowing what work needs to be done on a 203K, that's your contractor.
Okay.
So you got to make sure you get a contractor that understands 203Ks and understands how they get paid, and works within your budget of the loan also. So that way you're not overextending yourself.
All right, perfect. Thank you, my brother. I really appreciate it.
No doubt, bro. Thank you. I appreciate you, man.
For sure.
All right, Miss Business, I'm coming for you. Miss Business, I'm gonna promote you to a panelist. Let's get Miss Business on. So let me unmute you.
I don't know how to, I'm using it.
I'm gonna tell you, I just asked you to start your video right now. You got it? There you go, Miss Business.
Yeah. I am actually driving. I was like, oh my God, I told Matt I was hopping on at 4, so let me hop on. But I am driving. I'm probably gonna pull over to talk to you guys.
Yeah, we need you safe, Miss Business. Like, we need you safe first and foremost.
I know. Let me pull over. I'm pulling over. I was listening.
So look, while Miss Business is pulling over, all right, Miss Business is a superstar CPA. You know
I am. You gave me that title.
She is also a Earn Your Leisure alumni. Speaking of EYL, we have EYL University. Every Monday is real estate. Wednesday is financial literacy. Thursday, we have Rashad and Troy kicking game, basically an extension of the podcast. Typically, we offer EYL University for $29.99 a month, where we do everything webinar style, just kind of what you guys are seeing here. But we're offering it a special discount code. So if you go to EYLUniversity.com and use the promo code EYLU99, you'll get EYL University for $99 for the full year. So again, EYLUniversity.com, use the promo code EYLU99, and instead of paying $29 a month, you'll pay $99 for the entire year. Trust me, there's so much. We take the conversation a lot deeper on EYL University, lots of presentations, special guests, lots of knowledge. Every Monday night is real estate. So stay tuned for that. EYLU99 for the discount code. Miss Business, talk to us. What you got going on today?
It's been rough, Matt. You haven't even checked on me.
Because I know you buried in tax returns. It's tax season.
Dying, okay? It's tax season. It's been rough. It has been a rough tax season. I'm getting prepared. Well, right now I'm in the thick of it. I have partnership deadlines on Monday, S Corp deadlines on Monday. So it's just been a lot, like just trying to make sure my clients that need extensions, those extensions are in, everyone's last minute. So just trying to deal with all of that. It's been a rough tax season. I can't wait until it's over. It's been rough.
So let me ask you a question, right? Because, we have a pandemic on our hands here in our country. Talk to us from a tax perspective. What does that mean with this coronavirus? You see schools being shut down, sports leagues are shut down. Is the IRS going to shut down?
No. I mean, there has been some talks about them extending deadlines. That doesn't apply to business deadlines because obviously the business deadlines are on Monday. So they haven't released or said anything about, specifically extending deadlines for personal filers. But for right now, it's just like speculation where they're saying that they may extend it. However, I don't think the IRS knows. I don't think the IRS is going to close.
So,
I don't think so. I don't see that.
So IRS is not going to get the coronavirus and say like, yo, we're going to extend a few things.
I feel like they could potentially extend. Like when there was the hurricane, they extended it. But just to be clear in terms of what that extension means, that just means that they are going to allow you additional time if you are making payments. Most people who now, this is more the business season, the people who owe, right? Everyone who was getting refunds made sure they got their refunds already in January, February. But now it's coming to the business owners, the people that owe. So if they do allow an extension, what that means is you just have additional time to make any payments without incurring any interest and penalties, right? So the IRS, they want their money regardless. It's just going to, a matter of when you have to give it to them.
Okay. So what can we do? So since this is all going around, right now, from your perspective, like what can us business owners do, us entrepreneurs, what can we do like from a tax perspective right now that can help us, probably next year with our taxes? Like what should we be doing to prepare, like, especially because things are being shut down, loss of income, like what should we be doing right now, Ms. Business?
Well, you know what? I'm going to say this outside of a tax perspective. What I realized, and this is my fault, when I originally got my lease for my space, for my office space, one of the requirements was for me to get insurance. And I was supposed to get like lost wage insurance. And I never did it, just being very busy. I never did it. But this is a good time where if, let's just say, everything stops, that insurance would have kicked in and I would have been able to, cover my expenses, cover my staff, and I would have been able to, survive. Now, because of my negligence, I'm like, oh, okay. If I call them now, will they even give it to me? It's one of those things where you wait. It's like insurance. Where's Lindsay? It's like you wait. It's like you wait all this time, and then once it happens, then you're like, oh shoot, like I should have done that. So that's like outside of taxes. In terms of what can be done from a tax perspective, a lot of lost wages. I mean, those lost wages has to be accounted for, but it depends, right? Not all lost wages. You can't say, oh, I was expected to make this, so now I'm going to write that off as like some sort of lost wage. But as an example, I have a client that had a major sponsor like pull out of her event, right? So now that, and in that instance, that can be taken into account. So it's unfortunate because a lot of people are losing a lot of money, especially the industry of events and networking events and just these businesses in general. Brick and mortars are suffering horribly. So I mean, I don't know from a tax perspective more so, but more so just from a business perspective, it may be the time to consider doing more things online. Like if you're not online, it's time to get online because people don't even want to come out. So that's really important. And even sponsors, they have, they've canceled so much. South by Southwest, Coachella, they're thinking about, canceling Essence. These things are major things. And, I'm not going to lie, I wasn't taking Corona seriously until the NBA. Once the NBA shut down, I was like, no, there's something that we don't know. Yeah. This is bigger than what I thought it was. And then, I got some calls from my clients and now I'm like, oh wow, this is real. Like this is a thing. But I think I'm with you on that. I didn't really take it that serious because, honestly, the flu kills more than the corona. But once you start seeing major sports leagues shut down, then it's like, all right, we gotta take a chill pill right now and really take this seriously. But let me ask you this now: for real estate investors, for folks that's owning multifamily properties, obviously tenants are now going to start being affected behind this coronavirus. Is there any
type of guidelines or anything that from a, tax perspective, that if our tenants don't pay us, are we able to write off more or something like that to kind of, help, soften the blow, so to speak?
You can write loss rents off, right? So if you have a tenant there and they're not paying, you can write that off. But from a business perspective, it's cool that you can write it off, but you really need your money, right? Because the mortgage needs to get paid.
That's a fact. Mortgage gotta get paid.
And so these are things to think about. This is serious. Like, I always thought a recession was coming, but I didn't think it was going to be because of the coronavirus or virus.
Yeah, I mean, it's crazy. It's always the things that you don't expect, and it'd be the hard.
I did not think it was gonna be a virus. I'm like, okay, they do enough on Wall Street to probably cripple the market, but it is something to think about. Like 401ks are, really being impacted because not everyone is realizing it, but your 401k is attached to the stock market. So once that stock market goes down, your 401k goes down. Like, I'm upset because I've been trying to pull my money out of my 401k for a while. Again, being busy, not focusing, not doing what I say I'm going to do.
Yeah, I mean, look, I think this is scary times because it's the unknown, but I also think there's opportunity.
Oh, there's always opportunity.
There's definitely opportunity if you're smart on how you purchase. I had Envy on here earlier. He was actually the first person to come on, and he was saying that right now he's just being really aggressive with his investing, but also, going out there and offering things at major discounts because of the scare. And he's still able to move and shake. But I think we just all need to take that type of advice and just keep going. You know what I'm saying? And just be aggressive and just be smart and have a great CPA on your side, first and foremost, because you need a great CPA.
I save people so much money. I save people so much money. CPAs are necessary. Having someone on your team, especially, I actually just came from a speaking engagement for one of my clients. And, I was just pretty much expressing that having someone on your team that understands business, that understands real estate is important. Like, you can't stick with the person that has been doing your personal taxes because they're doing your business taxes. I mean, you can't have them do your business taxes just because they were doing your personal taxes, right? Like, that is super important. Like, super, super important. Oh, hold on. What did I do? Oh,
no, you're good.
Yeah, okay. So that's super important. It can't, you have to hire the right people, right? Like, you have to hire the right people because, one, it can cost you a lot. Two, like I tell my clients all the time, like, I'm so resourceful. Like, I have so many connections. Matt, that's like, one of my clients like, oh, I'm going to go for a property, but I'm like, oh, I got a lender for you. Someone's like, oh, I want insurance. I'm like, oh, I got Lindsay. Oh, I need a lawyer. Like, that's important because having all these people on your team that has the knowledge and has the expertise, they'll be able to guide you, and you don't have to pay for a lot of mistakes. And that's what happens in the beginning when you have a small business or when you first started in real estate, you pay for a lot of mistakes. And the reason why you're paying for a lot of mistakes is because you don't have the right people on your team. So that
Agreed.
is
team building is essential. You need a right team, and most people neglect to think that they need a good CPA. And I think the CPA is probably one of the most important members of your team because, you're going to have to pay Uncle Sam. It just depends on how much you're going to pay them. And if you have a good CPA, that CPA will definitely bless you and show you the way. So I want everybody, Ms. Business, tell everybody how to find you, how to reach out to you.
Yeah, so you can find me on Instagram, Miss Business, so ms.business101. My email is ask@missbusiness101.com. I have an office location in Brooklyn as well as Manhattan. You guys can find all that information on my website, which is missbusiness101.com.
All right, guys, make sure y'all hit up Miss Business 101 for all your tax needs. I'm telling you guys, this I'm not just saying this because, you know, me and Miss Business are friends. I'm also a client of hers. And I'm telling you guys,
She is my client.
you guys need to work with Miss Business because she's official. She knows what
I
she's
just want to
doing.
say that everybody is my client. I just want to put that out there. EYL is my client. EYLU is my client. Rashawn is my client. I spoke to Mobile Home Investors Elite today. They're going to be my client. I'm just, y'all know.
Superstar CPA.
Money.
Superstar CPA, Miss Business
Yes.
and our shit. You're about to be Took's client too. Took.
Yes.
Need
Took
you too.
been supposed to hire me since we did our first interview last year in February.
He right here listening to this. You should have saw his face too. No worries. He got you, he said.
Tell him I'll be there counting all that money he making
Word.
these good videos. You looking good
bag.
over there, Matt. You looking good. Took's doing a good job. You looking good. The camera look good.
Yo, I'm trying to tell you, we stepping up the game right now, man. We gonna write Took's off.
Yeah, Took's is a whole write-off.
He's marketing. A whole write-off. It's worth it.
Yes, Took's like me. He like an asset. That's why I tell my clients, I'm like, I'm a whole asset. Like that's I come with knowledge and you get to write me off. That's a fact.
All right, Miss Business. I ain't gonna hold you up though. I appreciate you.
No problem. I'll be by the office as soon as I get some air.
All right, do your thing, hon. I'll holler at you.
All right.
Shout out to Miss Business 101. Make sure y'all check in with Miss Business. All right. Now I'm gonna bring on. Let me bring on my guy, Jose. You hear me?
Yes, sir.
All right. Let me get Jose, the credit dude, on right now. We got the credit dude on, Mr. Credit himself.
What's going on, bro? Credit Bay here too. Say hi, babe.
Who this? Credit Bay?
Hi. Yeah.
What's up, Credit Bay?
Nothing much. We're going for a walk on this beautiful day.
I love it. I love it.
Trying to get away from that cabin fever.
Got to. I feel like I've been in the house for like a week now.
Crazy.
Yeah. They closed school.
Yeah, school.
Everybody's schools are closed. So.
Every schools is a wrap.
Yeah.
Yo, so I was telling Kelly and a bunch of other people, they're like, man, now we got to stay home, and I'm like, I'm home 24/7 anyway because I work from home. So it's like I'm used to it. You know what I'm saying?
This is normal life for you guys.
Yeah, everybody's like, yeah, you gotta we gotta be home now. I'm like, I love being home. You know what I mean? So
yeah, let's talk about this real quick, right? Mm-hmm. Credit is a big thing. Obviously, we got the coronavirus going on, and it's a pandemic. Everybody's freaking the hell out.
Yep.
We had a couple different creditors like T-Mobile, I believe. Who else was? I think AT&T.
Yep, it's Comcast, AT&T, Verizon, Sprint. What they're doing is they're not canceling the services if you pretty much go past due. They're waiving all collection fees, all late fees. So in a sense, like let's say if you wanted to be that person and not pay your bill for like 2 months, like on purpose, like they wouldn't do anything. But let's say if you do run into financial trouble, they're still not going to shut your phone off. You know what I mean? So that's pretty cool.
So do you have to prove like that you've been affected by the disease, by the virus, or was it just like we're going to forgive y'all for 60 days and call it a day?
So what I saw, I'm still doing my research on it, which I haven't posted about it yet. From what I understand, is pretty much everyone. Like, because it would be pretty hard to, pretty much say like, hey, give me paperwork. By the time you submit paperwork, it'll probably be a month, it'll probably be a month too late. So I think it's pretty much everyone. I think it's like a whole general thing. The same thing with like motor vehicles. Like, I don't know if you know that motor vehicles, they're extending it 2 months. I know that's in New Jersey. If you're in New Jersey, they're extending your motor vehicle. So let's say if your registration was due March 31st, it's now May 31st. If it was due June 31st, so they're extending it 2 months. So I think it's pretty much everyone. Creditors like Citibank. Now when it comes to like credit card companies and like that stuff right now, like Citibank, Chrysler, if you are affected by the coronavirus, you do have to prove it, and they will give you some type of leniency. Like Citibank is even giving people that are affected credit limit increases, which I think is pretty cool. So if you can prove that you were affected by the coronavirus or you have it, if you qualify for it, they'll actually give you a credit limit increase to help out with like the fees and the extra as far as like burden because you might not be able to work. So it's like, at least you'll have that credit, you know? And that's why I think credit is important, Matt, for times like this. So like, let's say if you get laid off your job or you can't work for 3 months or something like that. Like, yeah, people always say have savings, but imagine if you have $60,000 in available credit and you lose your job, you can, you know, use your credit temporarily to kind of help you out, you know?
Yeah, I mean, look, this is definitely an eye-opening thing. You know, just going into the supermarket and you see nothing on the shelves.
Crazy.
And you just realize how important it is to really start just stacking up on stuff. Especially when stuff goes back to normal. I told Tony, I said, yo, we just want to start buying mad toilet paper.
Yep.
Just and just wipes and Purell and just have a bunker, so to speak.
Yeah.
Of just like canned goods, just stuff, just every week, just buy stuff just to have it, because you realize how unprepared you are.
Absolutely.
For if something like this really happens. I mean, you have food in your house, but it's never something that can last you 2, 3, 4 weeks. You know what I'm saying?
Right.
So that was kind of eye-opening to me. Now with credit, so now if people, I'm not sure if you can answer this or not, because I don't know if this was put out there yet by any of these creditors. What if people start missing late payments? Like let's say in April, you know, people start missing late payments, but they were affected by the virus, by their job, or they got sick or something like that. Our creditors like TransUnion, Equifax, Experian, did they release any guidance on that yet?
Yeah, so one of the things that the creditors started doing, like the only ones that I've seen, like I said, Citibank, Chrysler, there's been a couple all the creditors that I've been trying to locate as far as doing my homework on, is the first thing you should do is call them right away, like immediately call them, because they'll kind of put your account kind of like on a hold to prevent that late payment to show up. But we had a meeting with my team on Thursday, and we already kind of foresee that there is going to be a lot of people that are going to be affected by it. So it's kind of like when the government shutdown happened, we had a lot of people that were affected. So it's like, as long as you can prove it, and even a lot of people, like, this is the thing, if you were really affected by the coronavirus, I would say don't use that as an excuse to remove late payments on your credit report when it does hit, because, you know, that's just not the right thing. But when you do get the paperwork, whether it's you know, you lost your job, or your job couldn't have you work for 2 weeks, or you had to get tested and you got sick, like all that stuff, that's all proof. You can submit that to the creditors and they will, you know, forgive you, which is one of the things that Chrysler said in Citibank, is that if you're affected, let us know. But I would let them know as soon as possible and not wait until that late payment actually hits your credit report, because they can kind of give you an extension.
Okay, that makes sense. Yeah. That makes sense. So
you
what
saw
other
student loan stuff too, right?
What happened?
You saw the student loan stuff, right?
Nah, talk about, I was just about to ask you about that. Talk about the student loans.
So the student loan, they're waiving the federal interest during this epidemic. So if you have a federal student loan, they should be automatically waiving the interest that accrues during this time, which is huge, because, you know, that's like billions of dollars nationwide, you know, with student loan debt. So this is only federal though, it's not private. So if you have federal student loans, Trump announced yesterday that they are going to be waiving the interest. So I'm going to look into more of that too and see exactly like how my clients can qualify for that. Because, you know, if you're in, you know, just so you know, like if you're in forbearance or if you're in deferment, the interest still accrues. And obviously if you're making payments, the interest still accrues. So it's like, if it's going to stop, it's like, all right, well, we need to know exactly from what date to what date. So that way they can't tack that interest on the credit report and all that stuff. You know what I mean?
Yeah, that I think that's a huge help to people, because, you know, I have some clients that pay, you know, they got pretty large student loan bills, and they got payments $1,000, $1,500 a month, you know, so they're basically not going to have any payments for the next couple months.
So from my understanding, the payments will still exist. It's just that the interest won't accrue.
So they just got to pay principal.
Right. So they won't accrue any interest. So whatever interest already accrued, pretty much no more interest will accrue from pretty much Friday on until it stops. You know what I mean? So if you already had $2,000 in interest already added to that loan, you know, and the next day, you know, because it accrues sometimes, you know, it depends on the loan, it could accrue daily, weekly, monthly, like it won't accrue after that period. You know, which is pretty cool. Save everybody a couple dollars a month, you know what I mean? So it'll be pretty cool.
Look, man, a penny saved is a penny earned, especially when you got to buy a bunch of toilet tissue for a premium right now. Toilet tissue is selling like Jordans you can't get right now. Like toilet tissue is at premium.
Crazy. Crazy.
Like this right here is premium right now. This right here, like, is premium. Yep. You need all of this stuff right now.
Yep.
And you know, any penny that you can save right now, I thought that was a good thing by the administration, by the government, to do that, because listen, man, people don't want to worry about that stuff while they're trying to worry about their health too at the same time.
No, I agree.
So all right, so tell us, you know, so you got people, you know, obviously first time home buyers and stuff like that. You know, tell us something that, you know, the audience can learn besides everything you just told us, which was great information, but give us some a quick credit tip during this crisis.
So during this crisis, the one thing I would say is try not to go crazy with maxing out the credit cards. You know what I mean? Don't get like into this whole thing where it's like, damn, you know, this thing's about to go crazy. Let me go ahead and spend. I have $10,000 in credit. Let me buy this. Let me buy that. Because that's the thing. A lot of people buy, and when they panic, they buy in fear, right? So it's like, if you're gonna go ahead and buy stuff, like, just make sure that you could afford it and pay it off, because the last thing you want to do is now rack up $2,000, $3,000 of debt that you couldn't afford. Now your credit score is going to go down. You were trying to buy a house, you were trying to do this. Now your credit score is going to shoot down. So it's like, just try not to go too crazy with putting stuff on your credit cards. Now, if you have the cash to buy it, by all means, do what you got to do. But like, we just went to the food store today and we just bought probably like $500 worth of more stuff, and we paid for it cash. You know, I didn't use a credit card, I used a debit card. So it's like, try not to go too crazy with spending money on credit cards, because you never know what is going to happen. Like right now, I mean, it's just crazy. NBA getting shut down, everything like that. So it's like, you want to keep that credit just in case you need to use that for something else. So just don't go crazy maxing credit cards out if you don't have to, because it's not going to be like, well, all the world's going to end. Let me max out my cards because I ain't going to have to pay it back because they're going to forgive it. You know what I mean? Like, just be smart with the credit money during this time frame. And if you can, call your creditors to ask for a limit increase also, so that way you have that cushion if something does go wrong. So like, if you have credit cards and they have low balances, you really have no late payments and you're good on credit, call each of your credit card companies up and say, hey, listen, you know, I have a $5,000 credit card. Is there any way I can get a $10,000, $15,000? Because now if something does happen, at least you have an extra $20,000 to $30,000 in limits in case something, you know, catastrophic happens. You're prepared financially with your credit in case you also lose your job as well, if that makes sense. You know,
I 100% agree with that, man. Don't over leverage yourself because you think the government's going to step in, because the government doesn't have to do a damn thing. No. You got to be smart, you got to be wise, and you got to make smart strategic moves right now with this crisis, man. But absolutely. Yo, man, Jose, I really appreciate you. I know thanks, you bro. And Kelly, you still celebrating her birthday, right?
Nah, we were gonna do a Dave & Buster's things up north. We were gonna invite everybody to Fairfield to Wayne. Mm-hmm. But I was getting ready to lock the room in, and we canceled on her birthday. We actually canceled it because they started shutting everything down. So we'll just do Dave & Buster's when everything clears up. We'll just have a big thing at you know, probably rent the room out and just have whatever. So we just went to dinner, but we weren't able to do anything. So now we're just going for a walk and, you know, playing around in the house and just enjoying the time like that. So, you know what I mean? But we'll definitely let you guys know.
All right, bro. Keep me posted, man. I appreciate your time today, man.
Yes, sir. Thanks a lot, guys. Appreciate it. And Matt, thanks for all you do, man.
Tell people how to find you.
Yeah, just Instagram, the Credit Dude, no underscores, no numbers, just THE, Credit Dude, right? DUDE. And hit me up on the Instagram. The best way to get me is try to schedule a call. DMs, as you know, Matt, sometimes get flooded, and I don't purposely mean to ignore anyone, but email, and then also click the link in my bio to schedule a call, and that's usually the best way.
All right, Jose, I appreciate you, bro.
Thanks, bro. Appreciate you, man.
All right, peace. Shout out to my guy, Jose, the Credit Dude. Make sure y'all hit him up for all your credit, credit needs. All right, so let's get back to the Q&A. I got Monroe. Talk to me, Monroe.
Hey, how's it going? Can you hear me?
Yep, I hear you loud and clear.
All right, so thank you for hosting this, and I figure I might as well get my question going. So I'm in the Queens area, New York City, which you're familiar with.
Uh-huh.
Of course. And I'm seeing a whole lot of new construction of two-family homes, but they're going for ridiculous prices.
Huh.
Yeah, so no co.
I like where this is going.
Yeah, so no cosigner. I'm basically trying to get into this on my own, but it's moderate income. So if you were starting all over with moderate income in this day and age, how would you try and get you?
What's moderate? Tell me a number. What's moderate income?
60 to 70K.
Okay, that's not moderate. You know,
I mean,
that's good income, bro.
Okay.
You know, so I would say, look, you're making 60 to 70K a year, and you're looking for a multifamily. So if you're gonna go with the FHA loan, you can do as little as 3.5% down as your down payment. You can also use the rental income to help you qualify for the loan. Now, are you looking to do new construction, or you want to go rehab, less price and put your own rehab into it?
I mean, what do you think is the better decision? The new construction definitely looks nicer.
I mean, yeah, the new construction. All right, so new construction is going to be you're buying someone else's, an investor's work. It looks nice, but you really don't know what that investor is doing. Let's hope they're not using all cheap material, and you're going to pay retail for that property because they purchased it at a discount. They put their money into it, so they want market value. So now that's not a bad option if you're someone who doesn't want to do any work. You know what I'm saying?
Yeah.
But if you have the patience and you want to get into a rehab, then you can try to find something that may be in Queens. I mean, a fixer upper 2-family will probably be in that 600 range.
Mm-hmm.
And you can do a FHA 203K where you can get the rehab money, and now you can put your own work into the home. So let's just say you get something for 600 and you got to put 150,000 into it. You may be into the house for 750 now versus you go buy something brand new in Queens and maybe 850, 900.
Yeah, I'm listening. Yep.
So you got to kind of pick your poison to see what's the best route. Me personally, I would not buy anybody's new construction property, me personally, because I'm looking at, and this is just me calling it what it is, right? The market in Queens right now is higher than it was back in 2004, 5, 6, and 7.
Definitely is.
It's ridiculous. You got Laurelton, Rosedale, you got Rosedale touching damn near $1 million on a 2-family. You know what I'm saying? And at the height in 04, 05, maybe you was catching something for 750, 800K, but now you're in the 900s. You got homes in Valley Stream right now going for 900,000. Like, it's crazy right now. So for me, just because I am now a student of the game, and I wasn't when I first got in, I wouldn't buy any new construction property because you're buying at the top of the retail market. And now if the market starts to decline, then you're going to be upside down right away.
Okay.
So I would probably recommend buying something below market value, something that needs work, only if you have the patience for rehab. If you don't have the patience for rehab, bro, then you got to do what you got to do and try to negotiate that investor down a little bit so that way you're not paying the top of retail. But if you got a stomach for rehab and you want to learn that part of the business, then I would go with an FHA 203K, buy something undervalued. So that way, if the market does decline, you're not going to get hit as hard as someone who's buying at the very top, if that makes sense.
Yeah, that definitely makes sense. But have you heard of stories being able to negotiate with an investor to get the price down pretty reasonably?
Depends on how desperate that investor is.
Okay.
You got to understand, investors most of them are not doing all cash, right? A lot of them are financing these projects. So you gotta, and it's also knowing the game too, right? If someone's on a hard money loan, they got 12 months. Maybe they got 18 months with an extension. So depending on how long that house has been on the market, how long they've been developing it, they could be in a situation where they got to pay off their lenders.
Okay.
So they may be a little bit desperate, and especially now where you have this virus going around, you have the markets going crazy. People will probably get a little bit desperate because they just want to lock in the deal and get what they can right now. So right now, I'm encouraging everybody, if you're trying to purchase a home, right now is the time. I personally think you need to be aggressive, but you also need to be smart. You need to negotiate. You need to stick to your numbers. if you are going to buy in this market. Because like Envy said, I'm not sure if he was on when Envy was
Yeah, I was
on
there
here,
when he was there.
when he was talking about, like, you know, he just bought a $8 million home. He got it for a good price, but like he said, if he would have waited a month, he could have probably got a couple $100,000 cheaper.
But we can't predict these things.
But you can't predict it. You know what I'm saying?
Yeah.
You can't predict it. But going into this environment that we're in right now, this coronavirus is in the history books now. You know what I'm saying? So like now is when all first-time home buyers, all investors need to be very aggressive with their negotiation.
Okay.
And go for it, bro, because the money is cheap right now. So go for it. Don't hesitate.
All right. And two more quick questions, if you don't mind.
Mm-hmm.
All right. So for someone that might be already in their home for a while, but it's an old house, like built 1920s, but $100,000 left on the mortgage, but it needs a lot of work. What are your thoughts on that person's next steps?
The home was built in the 1920s, you said, and they owe $100,000?
Yeah. $100,000.
How much is the house worth?
I mean, Queens prices, so $500,000.
It's a single family?
Yeah.
So 500 to 600K, and they owe 100. I mean, what are their goals? Are they trying to keep the home or they want to sell it?
I think they want to keep it for the long term, but like about that whole stomach for remodeling and whatnot, how would you go about doing that?
Personally, I would probably just do a line of credit.
Okay.
Since they have enough equity, I wouldn't probably touch that first mortgage, 100K, unless they had a higher interest rate. Then I would probably touch the first mortgage and refinance it. But if they had a good rate on that first mortgage, I would do a line of credit and rehab it, and put the money into it now. Because look, equity is monopoly money. So at the end of the day, it's here today, it could be gone tomorrow. So they could have $500,000 in equity today. If the market corrects itself and it starts to depreciate, that $500,000 can go to 400,000. It could go to 300,000. Who knows? You know what I'm saying?
Oh wow, that quick?
I mean, the market is the market. The market does whatever the hell it wants to do. You know what I'm saying? Mm-hmm. And when it starts making these type of corrections, it's usually quick. It's usually pretty fast. You know what I'm saying? So I would say definitely if they plan on living there and the house needs repairs, it doesn't make sense living in the house that you know needs repairs. Might as well repair it while you have the money to do so, because you're gonna live there. Might as well be comfortable and live good, you know?
All right. Thank you for that. And the last one is your thoughts on co-ops. What are your thoughts on co-ops?
I think it serves a need. You know, not especially here in New York. Co-ops are relatively inexpensive compared to condos or single family homes and multifamilies here. So if someone is looking, you know, if someone's single or maybe have a small child and they don't really want the maintenance of having a home, then a co-op is not bad for them. You know, you can get a good price, you know, maybe under 250K and get good amenities in a building. And you can probably still have a mortgage payment of, you know, with your maintenance, probably somewhere around 2,000 to 2,300, where in New York, that's the same as paying rent.
Yep.
So at least you still have ownership in property versus renting. So I'm not opposed to someone purchasing a co-op. Not at all.
All right. So thank you for your time. Appreciate you.
Yo, no problem, man. I appreciate you, Monroe.
All right. Have a good day.
You too. All right. So we got Lindsay here. So let's get Lindsay on. We'll promote you to a panelist, Lindsay. Let's see what's going on here with Miss Lindsay. I'm gonna unmute you.
Okay.
Okay, you got your video on? Yep, you did it right.
I think Lindsay. I got my video on.
What's up, Lindsay? How are you today?
What's good, man? I just drove by your office too. I'm in Valley Stream.
You should have came up.
You was on this thing. I was like, I'm not gonna pull up on
them. So what's going on today? What you got going on?
Nothing, just dropping Jada off to see the twins. She came to see her baby twin cousin, so I just stopped by over here. That's it. I mean, you know, with this virus, everything's canceled. We were supposed to be in Philly this weekend.
Yep.
I had another speaking engagement earlier for the AKAs. That got canceled. Everybody's pushing things out.
So what should people be doing right now? You know, everything's getting canceled and everything like that. You know, life insurance is very important. You know,
Absolutely.
Should people really right now be looking at their policies and reanalyzing their coverage and all this other good stuff? Like, what should people be doing from your perspective right now?
Well, the funny thing is I'm getting a lot of texts lately, a lot of emails of people saying, you know, making sure their coverage is still together. You know, they're like, did I miss a payment? You know, like this is a time where people are really trying to think about, now they're thinking about life insurance because they're saying, you know, you just don't know, you know, with the cases popping up everywhere and, you know, people passing away from this situation. This is when people start to think about what would happen if I wasn't here, you know. So having life insurance at this point, this is your time. I mean, people are home. This is your time to get your insurance. You know, like I work from home pretty much. I mean, I go to my office sometimes, but for the most part, when I'm doing my phone appointments, I'm working from home. So for me, this is still a busy time. A lot of people are reaching out. A lot of people are now thinking like, I need insurance to make sure my family is good. So, you know, unfortunately, tragedies is what stirs up people to even think about life insurance, because life insurance is something that people, it's not tangible for most. So people really don't think about it, you know, like that until a situation happens, like somebody passes in their family or, you know, somebody close to them dies, or, you know, that's when people are like, oh my goodness, they didn't have insurance when they passed away. We had to come up with all of this money. We didn't have it, you know, so this is a time now that people are thinking about that, you know. But of course, I think with this situation, people are also worried about their finances. People don't really, you know, a lot of people don't really have a lot of money saved. And so in emergencies, people are not prepared financially. You know, even like I went to the store yesterday and the day before, I probably spent like $700 on food, right? And it's just me and my daughter. So when you think about that, what if you didn't have this $700 extra? I'm probably going back to the store today, you know, just to collect as much stuff as I can. I know I'm normally a hoarder with paper towels and toilet paper, so I didn't really need to pick that up. But, you know, for people who don't have it, this is a time, if you had a life insurance plan and you had a whole life plan and you needed some extra money, this is the time you could have tapped into that. You could have tapped into your cash value and took a loan on it, or in the future, if something happens where you're running out of money, that would have been an option for you. So, you know, in my line of work, life insurance is definitely a time now where people are trying to figure out if they got money in their policies just in case they need it. You know, people are trying to make sure that their coverage is still on, that they're paying their premiums. So
what about, all right, so what about that person who has a whole life policy right now and they've built up some cash value? Would you recommend them pulling out some of that cash value right now if they have enough and they're able to pull out some of that cash value to kind of like give them a little bit more cushion right now during this pandemic?
Well, absolutely. I mean, if you need it, then that's what it's there for. You know, the whole life cash value is there for when you need it. You know, so if this is a time where financially you're in a place where you're struggling a little bit and you need to rack up on food and different toiletries and stuff for your family and you don't have it, don't go into debt and cause yourself to have more bills. You have an option created for you that you're able to borrow in hardship times. So absolutely, I would hit up the companies immediately and take a loan if I needed it. Absolutely. And the fact that, you know, and this is why I always stress to people, you want to have options so that when you're in a hardship, you have somewhere to go to get your money and you don't have to go into debt to get your money. And that's what life insurance does for you. It creates options for you. And so all my policy holders, you know, that are my clients, you know, if they having financial troubles at this time, I definitely suggest that they take a loan on their policy until they get back on their feet.
Okay, I like that. Most people always try to kind of talk down on whole life insurance because it is a little bit more expensive than term. But I think there's strategy behind everything. And everything that you just mentioned, I think is spot on. Term, you don't have a cash value. You can't,
Right.
it can't do nothing for you. It's like car insurance. You know what I'm saying? Like you can't do nothing to it, although it's cheaper and it helps, it serves its purpose when it passes away. But while you're alive, you can't really, do nothing with it. You know what I'm saying? But whole life, can help you during hard times. Now, for the typical person who may be, 35 years old, relatively healthy, non-smoker, like how much is like a whole life policy for like $1 million? Like estimate, I ain't gonna hold you to it, but like, just an example, just so people understand the cost.
So listen, people, this is for educational purposes only.
For educational purposes only. This is not an insurance quote.
This is not insurance quotes because it depends on the company, the age, your lifestyle, all of these different things. But I'm going to say an average 35-year-old female, average health, $1 million whole life will cost you about $975 a month. Right?
Wait, say that again. You said $975 a month for
$1 million. Yeah, $1 million whole life is a hefty whole life policy. I mean, you're talking about
12 G's a year.
Yeah, 12 G's a year.
So you need to be making some coins.
You need to make coins to have $1 million in whole life.
Okay, so you need to make some coins.
But let me say this because people have to understand the value in it, right? I brought $1 million whole life, I don't know, maybe when I was like 32, right? And so what am I, like 8 years into the policy? I have close to maybe $100,000 in cash value in it, right? So, I don't have 100, it's close to it, maybe like 80 or something like that, right? So, to say that what you put into the policy also has to do with what you get out of it, right? So it depends on your lifestyle, what you can afford, what you're willing to sacrifice. But if I needed to go into my policy for a loan, I would be able to get that kind of money. You understand? So you don't have to have $1 million whole life. You could get what you can afford. A 35-year-old, let's say $100,000 policy is probably more affordable for the average individual. Okay. It's $110 a month, right? We're spending $100, $130. I spend $130 on my cell phone bill for just me, right? So if I could pay $100 or $130 a month, and I could turn around and have some decent cash value, over a 8, 9, 10 year period, could still have a couple of thousand in there, then it makes sense. You understand? Absolutely. It's relative to what I was able to afford. So, $1 million whole life can scare some people away, right? Because that's why they be like, oh my God, I can't afford that. But you could pay $100 a month for whole life. Okay. You could pay $50 a month for whole life. Will you have $800,000 in cash value? No. Not if you're paying $50 or $100. But you still could turn around years later and have $10,000, $20,000, $30,000 in cash value. You understand? But it's still, in a time like this, you don't need 30 grand to get yourself food that, keep yourself on your feet, unless you got a $10,000 mortgage. So that this plan would have been able to help you, okay, if you had a whole life plan. So I highly suggest individuals, again, for educational purposes, because life insurance is based on your individual needs. So I do need to speak to you to know exactly what's best for you. But at some point, you want to have a permanent policy, not even just for the cash value needs, but just so that when that term policy runs out, like you were talking about, Matt, it's only for a little bit of time. When it runs out, what you gonna do? It's too many cases of people out here who have a term. What if right now you had a term policy and you was on your 20th year and the coronavirus hit, right? And now you have no insurance. You paid insurance for 20 years. You outlive it. God forbid something happens to you, you have no insurance, nothing. Even though you paid it for 20 years, right? So you gotta take into consideration the fact that the permanent policy wouldn't run out on you. You know, so the buy term and invest the rest, that Dave Ramsey quote, or the, you know, like, I'm not a fan of those because that doesn't work for everybody. Because I could tell you 90% of the people who buy term are not investing the rest. If you're an investor, you're an investor. That means you're investing, right? It has nothing to do with your insurance. They're two different things.
Agreed.
You know, so I think that people need to understand you always need to have insurance because it's so much unknown in our life. Coronavirus is unknown. Who would have thought that the day they shutting everything down? The NBA is shut down. Disney World is shut down. It's crazy. Disney World, who probably makes $50 million a day from people coming in there, they shut down. Yeah. Right. So, and the effect is going to take on everybody paying their bills, the jobs they work at. So you want to be prepared already. You don't want to have to get prepared. You want to be prepared. And that's what life insurance does for you.
I agree 110% with everything you just said, Lindsay. Listen, everybody that's on YouTube right now, I need y'all to smash the like button because this YouTube live / webinar is so many gems in this webinar. It's action-packed with information. Smash that like button for me, guys. Share this with your community because this is the type of information that we need to spread to our community. I know my page is real focused on real estate and real estate financing, but you cannot build or create generational wealth without having insurance, without having life insurance specifically. You know what I'm saying?
It's the glue to your portfolio.
It is the glue to your portfolio. Seriously, take this seriously. I want y'all all to hit up Lindsay Smith. Lindsay, tell them how they can reach out to you.
So you guys can check me out on Instagram at Lindsay Smith the agent, and my name is spelled Lindsay because I know people spell Lindsay a lot of different ways. Also, in my bio, you're able to set up a free consultation with me to either learn about life insurance, IRAs, rollovers, investments, either way. My website is Lindsay, spelled the way I just said, LINDSAY Smith.net. On there, it will allow you to email me. My phone number is on there. My office address is on there. So you can get in contact with me any of those ways, and we can set you up quick for life insurance and make sure that you and your family are protected.
Yeah, and Lindsay can help you if you're nationwide. So I want you guys, especially we got this coronavirus, people are dying off of this. People die off the flu more than the coronavirus. Is people die in general, right? Life happens. No one expected the coronavirus.
Unknown.
No one expected Kobe to die. God bless the dead.
Oh my God.
Who passed away in that helicopter
this
crash.
Year, right?
2020,
This year is crazy.
2020 is a roller coaster right now, people. And if this doesn't wake everyone up who's going to watch this, and if you guys don't understand the importance of having an insurance and having estate planning, like it don't matter how much money you make, like at any given moment, God can call you home. So I want you guys to take this seriously. You need life insurance. You buying real estate, you investing, whatever it is you're doing, you need to have life insurance. Hit up Lindsay Smith, the agent. She'll take care of you guys. Go to her link, Lindsay Smith, the agent, on Instagram. Set up the consultation. It's free consultations. Talk to her about your plan. Do not be out here not protected. Lindsay, that's all I got for you right now. There's a couple people with their hands raised. I want to try to get to everyone, but I definitely appreciate you.
Yes, thank you, man. I appreciate you. Love what you're doing. Everybody, make sure you look at all of Matt's YouTube videos because he got some really good ones. And make sure you check out our other one. What's our other YouTube?
check out the
protection insurance.
Mortgage protection insurance. Check out that video. Me and Lindsay collaborated on that. It's filled with information. She drops tons of gems in that video. So make sure everybody who's watching this, go to my YouTube. And if you're on YouTube after this video, go watch that mortgage protection insurance video on my YouTube channel. And it's a playlist up there. It says in life insurance on the playlist. So there you go. Lindsay, I appreciate you, hon.
All right, Matt.
All right, peace. All right, so let's get to some more questions. Donnie, I'm coming for you. Donnie, you're unmuted. Talk to me, Donnie.
Hey, Matt, can you hear me?
Loud and clear.
Hey, I really appreciate you taking the time out of your busy day to answer some of these questions.
No problem.
Quick question for you. I am currently in my fourplex, about 6 months deep or so. Utilized, the FHA 3.5% program. Also got in with a, first-time homebuyer grant for 3% down. Got to the place where, half a percentage point, right? Again, I'm 6 months deep. Trying to look for my next move here. The issue I'm having here right now is, how do I get into my next property? Utilizing some of those same strategies like FHA, if I'm already in an FHA loan, right? And of course, in order to refinance, you need at least 20% equity in the property. How do I go about forcing that appreciation in my current situation, in my current units, to get out of this FHA loan? And then the second question is, can I refinance out of this FHA loan before that 12-month, threshold that the government has on it?
So first things first, well, it's kind of, I can answer them all together. So when you have an FHA loan, you have to live in it for 12 months as your primary residence. And in order for you to use the market value, you're going to have to wait at least 12 months also, because if you try to do a refinance right now, they're going to use the purchase price, not the market value.
Gotcha.
So it's going to be almost impossible for you to quote unquote force the equity appreciation in that property. Now, did you buy this house retail or did you buy it undervalue?
I bought it a little bit undervalue. I'm out here in Austin, so it's difficult to make moves like that.
How much did you pay for it?
I paid $350 for it.
Damn, $350. And how much rental income?
I bring in about $33 a month. And
that's with 3 units being rented out?
That's with 3 units, yes, sir.
And how much is your mortgage? Probably around what, 2,200?
23, 24.
2,400. So I was close. So not only are you living rent free, you're making $900 a month.
That's about right, yeah.
My man, I love it. I love it. I love it. I love it. I mean, look. Now, how much is this house worth?
That's a good question. I don't know, right? I mean, your Zillows say it's worth 380. It's how do I go about getting that appraisal? I'm out here, not exactly in Austin. I'm a little bit, on the outskirts, so it's difficult to look at sold values of the area. When they did the appraisal, they were grabbing appraisals when I first bought the place from 2 or 3 years, 4 years down the road, and stuff out in Georgetown, stuff like that, to grab their appraisal on my price.
I mean, look, man, you have a good property. It's cash flowing. When you move out of here, you'll probably make an extra $1,000. It's going to be very difficult if the market is not performing. Then it's really nothing you can do about that. In all honesty, it's going to be very difficult for you to refinance out of this and go into a conventional, because you had a 4-family or 4-plex, and you're going to need at least 25% equity to do a conventional refinance on this property. So it's going to be, in your situation, in all honesty, Donnie, it's going to be extremely difficult unless you pay down your principal balance aggressively, or the market just completely turns around and you gain 10, 15, 20% of equity in the next 6 to 12 months. So in your situation, I think you did it right with going, 4 first versus doing a 1 or 2. Mm-hmm. But the reality of it is you might have to go with a single family or something like that for the next property. If you don't have enough capital to put down a large down payment for the next conventional loan, you might have to go single family and do 5% down for a single family and use that as a primary residence, and then just rent out the 4-family and have the 4-family cash flow pay for your single family.
I feel you. I feel you. Yeah, I mean, as you see, you know, the situation I'm in right now is great. And I'm trying to scale it. I'm trying to accelerate it, right? And unfortunately, there's no loan programs out there that are available to get into another, you know, multi-unit family like I'm in right now with minimum down payments.
Correct. There's nothing else. The FHA is the ideal program for multifamily buying with minimum down payment. But also another thing you mentioned earlier, you have a home buying grant also, right?
Yes.
Now, how much did you get from the home buying grant, and what are the terms of that? Because most of them, if you try to refinance, they're gonna want to be paid off.
Right. So the grant was 3%, and all they required was live in the place for 6 months. After that, your loan's forgiven.
That's a good program.
Right. It's T-Shack for anybody out there in Texas.
What's it called? Say it again.
T-Shack.
T-Shack. TSHACK.
TCH. So it's a Texas the Texas Housing Authority or something like that. Let me find it.
Yeah, I'm actually writing this down. All right. So yeah, for all my people in Texas, you know, look into that one right there, because if it's only 6 months, that's actually pretty damn good.
Yeah, it's the Texas State Affordable Housing Corporation. Excuse me.
Corporation. Okay. Yeah, man. So look into that. Everybody in the audience, if you're in Texas, look into that program. I'm gonna do some research and I'll put it in my stories and Instagram later today for those of you in Texas. But you know, honestly, Donnie, there's really nothing else that I can see you doing with this property and getting out of that FHA. I think you did it the right way. You might just have to, you know, bite the bullet because of the area you purchased in, and it's not an appreciation, it's more of a cash flow area. So you might have to bite the bullet on this one,
just sit on
it. And sit on it. And then if you want to buy something else, it might have to put minimum down, and it's going to have to be a one family property. To do minimum down payments. Multifamily in duplex, you know, triplex and quads, conventional is all going to require 20 to 25% down payment.
Gotcha. Okay, yeah, that makes sense. I mean, I've been trying to research and find out. I figured I'd hop on the phone and ask you. I mean, you have the experience, you have the knowledge, and it looks like there's only one direction to go, unfortunately.
Absolutely. Unfortunately. I wish there was more, brother. Trust me.
Appreciate it. Hey, Matt, thank you so much for your time, man. I really, really appreciate it.
Nah, man. Thank you for checking in with us, man, and telling your story. We really appreciate it.
Not a problem.
All right, brother. Shout out to Donnie, who house hacked and he did it right, man. Making $900 a month and living for free. So, all right. So since we, you know, I'm gonna bring in Sabine, because we're sitting here talking about house hacking and we're talking about all this good stuff, right? So Sabine, I'm gonna make you a panelist right now. If I can find you. Where'd she go? Sabine, are you still on? I swore I just saw her and now she disappeared. Okay. I think she disappeared on me. All right, Sabine, if you hear me, jump back on. Someone else had a question too, but their hand is not raised no more. So if you have any questions, if you're in the webinar, please raise the blue hand so that way I can get your question on. Shout out to everybody on YouTube. I appreciate all of y'all. Sabine, turn your phone around, honey. There you go. Hold on one second. Let me unmute you. Can you unmute yourself? Can you unmute yourself? I can't hear you. Unmute yourself. Okay, we're trying to get Sabine on. You have no sound. I can't hear you. I see you, but I can't hear you. That's odd. I can't hear her. Nah, no sound. I think it's some. Okay, wait, something's happening.
Oh wait.
There
now?
you go. There you go,
All right,
Sabine.
got it.
We got the purpose lawyer, Sabine, the purpose lawyer, Sabine Franco.
Hi, everybody.
First
How's
of
it
all,
going?
happy birthday weekend.
Thank you very much. I'm enjoying.
Massages and shit, having a good time this birthday weekend, huh?
You know, gotta get it in.
You got the glow right now, and it's not the sun.
A little bit of both.
A little bit of both?
Yeah.
So look, we having a great conversation. We had Envy on to start everything off.
Oh, that's dope.
We had Miss Business talking taxes. We had Jose talking credit. We had Lindsay talking life insurance. Now, let's talk a little bit because, you know, this coronavirus is crazy. Everybody's scared. Everybody is like panicking, right?
Mm-hmm.
So everybody's out here trying to make $1 out of 15 cents.
Right.
Everybody talks the term generational wealth. But when you ask people, do you have life insurance or do you have an estate plan? They always say no. So my thing is, how the hell are you building any type of generational wealth without an estate plan?
Right.
So can you speak briefly on the importance of estate planning?
Yeah, I mean, it is like really critical for people to have some sort of plan in place because like every day people are dying without having their property secured, without having their assets secured, without having a plan. And then it's just like everything they worked hard for, it just like goes in the toilet. Like I get calls every day from people who are like, oh, my so-and-so passed away and the property was in my uncle's name. And so, but I know they intended to leave it for me. And it's just like, well, how is that possible? People don't understand the simple things that they could put in place to protect themselves. So if you have any type of assets whatsoever, either now or you intend to have in the future, then you need to have a plan in place. You need to have at least at minimum a will to say, okay, when I pass away, I want, you know, my properties to go here. If I have young children, I want, you know, this person to take care of my young child. If I have, you know, anything you have that's of value, it doesn't just have to be assets. It could be stocks. You could have a stock portfolio. You want to have a plan for that. And even when you have like, you know, you might have like a retirement plan. A lot of people have at least a retirement plan if they worked for a company. But what they don't realize is, say the person who you left as your beneficiary passed away before you, what happens to that retirement plan? So all that money that you worked and built up over the years, that
You're in the matrix, Sabine. You're in the matrix.
How about now?
You're better now.
Okay. What did I leave? What did you get? I leave off of?
I don't even know. You were saying something.
Okay.
And then went to the matrix.
Right. So what I was saying.
Matrix. You're in the matrix.
Oh man.
There you go.
I'm on the move.
Yeah,
Better?
you're moving it. You're
Okay,
moving and shaking. You're in the matrix. So basically, make a long story short, people need an estate plan.
Yeah, to make a long story short, I wish I could explain it better, but yeah, you need an estate plan because what's going to happen is you're going to die without a plan. You're going to die anyway. So there's no question about that. You're going to die and you're not going to have a plan, and everything that you work hard for is not going to be left to who you want it to be left for. Or you're going to end up spending a lot of money in taxes that you could have avoided, that money could have gone to your family. Or you're going to just end up not having anything in place for anyone else to come before you. And I think one of the biggest things with our community is that people think like, well, I earned this money, or I built this wealth, so why am I planning to leave it for somebody else? I don't really care what happens after me, like if they don't have young children. But that's why us as a people are in the place where we are, because people who don't look like us, they don't think that way. They don't think, okay, there's no one after me, or there's no one in my family that I want to leave it to, so therefore I don't make a plan. they think, okay, I want my race, my society, my people like me who came from the schools I went to or the communities I went to, I want them to benefit for it. So even if you don't have a loved one, you could start a foundation, you can give to like your school if that really helped you, a club that helped you become who you are, or whatever it is, you can make a plan for that. So that's how the next generation gets to grow and be provided for. Like, say you were somebody who was in the arts, or and you know that in your community it was super hard, or your parents happen to be super lucky to be able to put you in something like that, you could start a program for the next generation to make the person, you know, to give back to the people who were like you, who came from where you came from. So we need to not only plan for our lives, but also for the lives of our community as well, if we can.
1000% agreed. Now, how long does it take to set up an estate plan?
It's super easy. Like, so what I normally do is when people come to me and they're like, well, I want to set up I want to, you know, plan for the future. Most people don't know what it is that they need. So I usually give them a questionnaire that has a bunch of questions about, you know, what assets do you have, which is kind of a big, broad question, but, you know, do you have life insurance? Do you, you know, where did you work? Do you have a home? Do you have stock? Do you have, you know, what personal items do you want to leave, if any? And so all you have to do is fill that out. And it basically would take us like a week to 2 weeks to kind of draft, to one, come up with a plan and discuss that with you and see if that's what you really want to do. And then two, put the documents together and get you on your way. I mean, but it is also something that you want to keep in mind that you're looking at over time, because you don't want to just put it in place and then never look at it again. And this happens with people who were married, say they were married and they left everything to their spouse, or, you know, left a significant amount to their spouse, and then they get a divorce and don't make any changes. Or if they have a new family now, and they left everything to their previous children and they don't make provision for new children. So things like that, you want to continue to look at it over time, but it's very simple and quick to put together.
So once you put everything together, you have to file it with the state?
No, you don't. So a lot of times people don't want to have their information public, and they don't want, you know, say cousins or other children maybe that they don't want to leave something to, they don't want them to know. It's private. You do not have to file your will with the state. You do not have to file your trust with the state if you decide to put a trust together. It's all private information. The problem about that, though, is that some people do put a plan in place. They do have a will, but they don't tell anybody where it is. And they don't make a plan for if they pass away, who's going to know where the will is and who's going to be honest about saying that there's a will. There's been so many people that I've spoken to that say someone passed away and we know there's a will, but we don't know where it is. Or we think there's a will, we think someone else is hiding it. So you do have to make sure that you have a trusted person, or you leave it with a bank that you give authority to somebody to actually have access to it, so that when you do make a plan, that people know what's going on.
So you need a trustee.
You need a trustee or a trusted person that you are sure is going to also make public to your family exactly what it is that you wanted.
And you can have a trustee, can be a business, it could be your attorney, it could be anyone, right?
Yeah, so when you say trustee, that's actually a legal term. So when you're talking about a trust is also another way that you can leave your assets to loved ones or whomever you decided to do so. And it's a little bit better than a will, because it allows you to avoid going to court to have the court involved in you distributing your assets. And the person who you appoint to actually distribute those assets is called the trustee. So a trustee could be anyone. You could appoint a friend, you could appoint a bank, you could appoint a lawyer, you could appoint, anyone. The only thing is they do have a duty to do what's responsible for the trust and what's best interest for the trust beneficiaries, which are the people who are going to be taking from the trust or benefiting from the trust. So they have that responsibility, but you can leave anyone in charge of your trust, essentially. And the same thing as an executor. Executor is the person who you appoint in your will, who's going to actually walk out the things that you have requested that your assets be left to, or walk out whatever responsibilities are in your will. The executor is the person that would do that, and you can leave that to anyone as well.
Yeah, so we need to do a whole separate video outside of this because
I know
like
it sounds a little complicated.
not even the fact that it's complicated. I followed everything that you were saying, but it's just
Okay,
so many
good.
more questions that I have. And in the
Yeah.
effort of time, I'm not going to sit here and ask them all to you. But
Okay.
I think we need to like really sit down, come to the office, or I come to your office. We'll bring the mobile studio with us, and we need to really like break this down so that way people can kind of like really understand the differences between everything that you're saying. Because I
Yeah.
know you on a run right now. It's birthday weekend, spa treatments. You got all this lovely stuff going on.
Right.
But the information that I hope they were really paying attention to what you were saying because this was just some real quick free game. And it's very
Exactly.
important, estate planning is like that bridge for generational wealth. And, we're in that real estate world and people always talking about I'm building generational wealth, but don't have the proper tools in place to really create that generational wealth. And this is
Right.
the most important tool. So we definitely need
Yeah.
to do another video very soon, Sabine.
100%. And we also
And
want
she's
to.
married. Whoever in YouTube said, damn, she's kind of cute. Just so you know, all right? You
But
need to
I
chill out.
appreciate the compliment. I'll take it.
I'm pretty sure she appreciates the compliment, but I'm speaking for Steve right now, all right? Slow down. All right.
Pump your brakes.
Man, pump your brakes, son. But thank you for the compliment. But
Too much.
We need another video.
Let's do it. I'm down. We'll break it down for everybody.
Word.
Make it real clear.
All right, Sabine. Enjoy your
All
weekend.
right.
Tell them how
No
to
problem.
find you and follow you.
So on Instagram at I'm Sabine, SABINE_the Purpose Lawyer. And on Facebook, I'm Sabine Franco or Franco Firm. And on LinkedIn, I'm Sabine Franco. So
there you go, man. Make sure y'all follow Sabine. We're going to have that estate planning video coming soon on YouTube. Make sure y'all lock in. Sabine, I appreciate you.
Anytime.
All right, hon. All right, guys. So look, you guys heard from a very successful investor today with DJ Envy. You heard from my superstar CPA, Miss Business. You heard from the credit dude talking credit. We had Lindsay Smith talking about life insurance. We had Sabine dropping some gems on estate planning. Yo, if you guys do not hit this like button on YouTube, I don't know what to tell you. This is a lot of information, all random, put together at the last 99 hour. I thought it was very important that I came on today because everybody's going crazy about this pandemic that's happening. But don't have too much fear. Be cautious, be smart, but don't let this stop your real estate goals, whatever they are. If you're on the webinar, if you have any questions, this is your time. Raise your hand. Let me get you on. If you in YouTube world right now, watching this live on YouTube, if you want to join the webinar, I'm going to put the link in the comments real quick. I'm going to probably take one or two more questions, and then I'm going to be off this because it's Saturday, it's 5:30, and I don't want to be here all night. So if y'all don't have any more questions, we're about to get up off this then. Everybody, all right, so we got two questions that came in real quick. Let me start with David first. David, talk to me.
Can you hear me? I just unmuted myself.
Yep, I hear you loud and clear.
Cool. Sorry, I joined late. I joined like right now, hoping you guys weren't gone. But recently I've been researching 203K loans.
Okay.
To do the first buys, and I was looking to partner with some of my peoples to kind of do it ourselves. So my whole thing is the plan I'm putting in motion is I want us to get some multis with that 203, rehab, do them for a year and then refi and flip. Well, not flip, but refi and then keep that cash flow. But the problem I'm seeing is the exit strategy from the 203K. I know you said refi, but even if you refi, wouldn't that still be on our personals, or is there a way to refi and then roll it into a LLC? Do you know about that?
Good question, David. First, let me tell you FHA loans, because a 203K is a FHA loan right? So FHA is only for primary residence only. You do understand that, right?
Yeah, the plan is to live in it for the first year.
Correct. So it's going to be, you're going to live in it for the first year. It's going to be in your personal name. The mortgage and the deed will be in your personal name. Now, when you go to refinance out of it, you can go into a conventional mortgage and put it in your personal name also. You have to put it in your personal name, I should say. But if you don't want to refinance and go into a conventional loan, you can do some sort of asset-based lending where now you can put it into your business name, mortgage, and a deed. But the cons of that is you're going to have a much higher interest rate than you would with a conventional loan. So if you and your team wants to put this house in the business, in the LLC's name after you do the FHA and live in it for a year, then you're going to have a higher interest rate. So you can do it. You're just not going to have the best interest rate.
Gotcha. The main focus I'm on is long-term and cash flow. So acquire, and then once a portfolio is made, that's when we'll start thinking about cashing out. But the idea right now is to stay at positive cash flow.
Yeah, I mean, in the year we could analyze those numbers to see if it makes sense to go into the asset-based loan to see how it impacts your cash flow. But if this is something that you guys look, this is the perfect type of house hack from what I'm hearing. You're using minimum down payments. You're gonna follow the rules and live in it for a year. Then after the year, it's free game. Put it into your LLC, and as long as your cash flow is not impacted severely, then you can keep it moving and use the FHA again and repeat the cycle. And now you can have that property, that original property, have nothing to do with your personal name.
Gotcha. All right, man. You basically reassured me that it's a solid idea.
No, it definitely is. I speak about it all the time. I think FHA is one of the perfect tools to accomplish house hacking and building a real estate portfolio if you do it wise. What people always come to me, David, and they tell me, like, I want to buy this house, and I plan on don't live in there, but I'm gonna use FHA. Like, I'm a licensed mortgage professional. That you're not gonna have me committing fraud. You know what I'm saying? Like you have to live in it for a year. And to me, doing a year sacrifice in a property is not a big deal, because after a year, you got to think about, by the time a woman gets pregnant and have a baby, and that baby is 3 months old, that's a year. You know what I'm saying?
Yeah.
So like, really think about how fast, and anybody has kids, they can probably understand what I'm saying. Think about how fast that goes. For the man, at least. I know not for the woman, but for the man, at least, it's like that. So it's the same type of time. If you just sacrifice and you do it the right way, you can really build up a nice portfolio.
Gotcha. Thanks, man.
No doubt, man. Thank you. I appreciate you. Corey, I'm coming for you right now, Corey. Corey Harris, talk to me. Got to unmute yourself, Corey.
Okay, there we go. Can you hear me?
I hear you loud and clear. What's up, Corey?
Hey, how's it going?
I'm alive and blessed.
That's good. First of all, thank you for having this forum. Truly appreciate it.
You're welcome.
For somebody that's just starting out, and already has a primary residence. So I already have a home, already living in my home, already have my family in my home. And I'm looking to purchase my first property to use as a rental. And the problem that I'm having is that, I have a little bit of money that I can use for down payment or anything like that. But my primary issue is, from what I understand, the 203K loan is only if you're going to be living in it, correct?
Correct. FHA loans, 203K is part of the FHA family. So FHA loans are for primary residents only.
Okay, so if I'm looking to buy a discounted property, whether it be through a foreclosure or something like that, how do I take advantage of the different mortgages that are out there and still not to, have to put up a whole lot of money? Especially if I'm considering a multifamily.
Well, look, Corey, I'm gonna just keep it real with you. There's really no trick around it. When you're doing multifamily investing, you only have a few avenues to go. If you go conventional financing, you're going to have to put down 20 to 25%. If you go asset-based financing, the same thing. If you go hard money financing and you find a property that needs rehab, if you have experience as an investor, then some hard money lenders will let you do 10% down, right? But if you don't have experience, then you can expect the same 20 to 25%. The only loan that's really out there right now where you can buy multifamily properties, 2 to 4 family units, and put 3.5% down is FHA, but the only caveat is primary residence. So if you already own a home right now, you have to prove if you want to use FHA, the underwriting department is going to want to know why are you moving out of one family to go to a multifamily? What's the motivation behind it? It has to make sense. And it happens. I've done several loans where people are moving from one families and going into 2 or 3 families properties because it just made sense. But if you're looking for something, if it doesn't make sense, then it probably won't work for you, to be honest with you, and you're going to have to put more money down.
Okay. So if I do decide to put more money down, which is the 20 to 25% down, using a conventional, and I guess buying that first property at a discount, whether it be a foreclosure or some of the auctions and stuff like that, I guess what I'm trying to figure out is what kind of mortgage would I use for like an auction or for a property that is a foreclosure?
Well, you can use FHA 203K again if it's primary residence. You can use, but typically if you're looking for straight investment properties, hard money loans is where you want to go.
Okay, but wouldn't I have to have the money for that first in order to? Because here's the problem that I have. If it's an auction, they want the money right then and there. So if I go to a live auction,
with an auction, they don't want the money right then and there. You need to have your down payment right then and there. Yes. So your down payment has nothing to do with the loan. So if you don't have down payment money, then you shouldn't be looking for any house right now.
No, I have down payment money. I have roughly about 30,000 saved, ready to go.
Okay.
So, but I don't want to have to use all that if I don't have to.
Where do you live?
Texas.
And what's the price range of the properties you're looking at?
Roughly for single family, anywhere between 100 and 150, maybe even 200. For the multifamily, I haven't found too many of those that are not on market, like retail. But I'm really trying to stay for my first property between 150 and 200.
So if you're going, let's just say 200,000, if you do 20% of that, I mean, that's 40 grand right there. And then you still have closing costs, right? So your closing costs could be another 5 to 7% also. Then if you buy something that's rehab, Corey, like if you do a hard money loan, for example, and let's just say the hard money loan, you find a hard money lender out there that gives you 10% down payment, right? So you have 20,000 down payment. And let's just say your closing cost is 7,000, right? So you spent 27,000, you got 3K left. You're going to still need to use that 3K to start your rehab on your property, because the hard money lender is not going to give you, let's just say the rehab cost is 50K. They're not giving you a check at closing for 50K. You have to do work and then you get reimbursed. It's called a draw.
Okay.
So you're going to need capital for down payment, for closing costs, and to start your rehab.
Okay.
So 30K, if you're looking at 100 to 150K, may be enough to get you started with down payment, closing costs, plus starting a rehab project, but it's definitely tight, Corey. I probably would recommend.
Hello? Hello?
Can you hear me?
Yeah, I can hear you now.
All right, so yeah. Sorry about that. I had a little technical difficulties. All right, so I was saying that if you got
Hello? Can I can't hear you. Can you hear me? No, I still can't. I can't hear you.